Hey, howdy, friends. It's Steve DePoe here with the Rose Realty team with today's real estate vlog for North Texas. Today, financing your home for purchase. So, look, I mean, a lot's happened in, let's say, the last 4 years. Real estate markets kind of up and down. We know that the interest rates kind of from like 2021 or so, or 2020, 21, something like that, have kind of been on a steady increase right now. Right now, they're around seven-ish, depending on your credit score and all of that, and what kind of loan you're looking for. But what kind of loans are out there? What can I go out there and get, or what can I go out there and afford to either purchase a new home, a resale, or a new construction? Okay, so let's get into it. So first of all, there's bank statement loans. Now, bank statement loans are perfect for people who are consultants, freelancers, self-employed, those types of folks, like real estate agents, right? And so what you need for that is tax returns, W-2s, pay stub, and verification of what you're doing. Now, this may sound like a normal, loan, like if you were working for, Amazon or something like that and pulling down a steady paycheck every single week, the same amount, but it's not. What the lender will do, take a look at it and say, over the course of, a year or the year or history, you are able to pull down this much money a year. And so, based upon that, and based upon the fact that you're obviously going to keep going because you're looking to buy a house and get a loan, here's what you can afford in terms of a mortgage. So it's a little bit different than your traditional loan with a traditional, 9 to 5 job. They're basically based upon your history and your kind of like your work ethic, you may call it, and what you've done in the past and what they predict that you can kind of do in the future. And so these are, again, good for consultants, freelancers, those types of people. Hey, before we keep on going, let's do us all a favor, please, and go to our YouTube channel, which is youtube.com/at moving to Dallas, Texas. Like and subscribe to our YouTube channel. You're going to find out over the next couple of weeks that there's going to be a lot of vlogs that I do where I'm going to refer to a past vlog. And if you're serious about real estate, you're going to want to have access to those passive logs. And so it'll be great for you and for us, naturally, if you go to our YouTube channel and sign up and subscribe and like our channel. And that way you'll be able to get access to all the vlogs we've ever done, videos on houses that we may be featuring. And we'll be doing some more features as 2025 progresses. We'll be doing some more features, more kind of candid and kind of cool features than we've done in the past. So, stay tuned for that. So, hey, we thank you, and we appreciate your time and your support of our channel and naturally our real estate business. Okay, so our next is the debt service coverage ratio. So what this is basically for is for people who want to buy an investment property. Okay, and so what the lender will do is say, okay, so after we've given you the loan and you're paying back the mortgage and the principal and interest, and then you have taxes on top of that and homeowners insurance and maybe HOA or whatever, you're going to have this much nut at the end of the month that you're going to have to pay. And so based upon that nut and how much you figure you're going to be able to get for this to rent this property out, they'll determine whether they'll give you the loan or not. So if that nut comes to, let's say, $1,500, and you feel that you can rent it out for 2 grand, and here's why, every month, then they'll say, yep, no problem, we'll give you the loan. If it's the other way around, they'll probably ask for more money down. Okay, hey, you're going to have to, come up with some more cash, or look for a cheaper place. International home buyers. This is a now a little bit different approach than for U.S. home buyers, in that they have a 75% loan to value limit. There's no credit check, a $3 million top of the line. The loan can be no more than $3 million, and there's no income verification. Now, part of all of that naturally is because of the ability for the bank here to go back to, I don't know, pick a place, excuse me, Spain or wherever, and check to see, what your credit limit, what your credit rating is, and what your income verification is, and all that. What they will do is they will do a hard appraisal on the house. Frankly, let's be honest, to make sure that if you're an international buyer and if you default, they'll get the money out of the house. Okay, that's why they have a 75% loan to value ratio. That there's a higher likelihood that they'll get the money back out of the house should something go sideways. But anyway, international buyers. And then there's the asset qualifier loan. So basically, this is really good for retirees, divorcees, self-employed, those types of people. And what they basically do is say, okay, so let's focus on the retirees for a second. So you have 401ks, that are worth, $10 million, and you want to borrow half a million to buy a new place in a 55 plus community, let's say Robeson Ranch here in Texas. Um, and then can you afford, number one, can you afford with your draws from your 401k or from your retirement or whatever, can you afford to make the payments? If it doesn't quite add up, then can you subtract a little bit out of your 401k every month? Or can you afford to just pay it off should things go south? And then the answer in that scenario would be yes, and then you would then you would get the loan. So it's based upon your assets, your liquid assets like your 401k and investments, and those kinds of things is what they're going to base it upon. And then finally, a renovation or construction loan, right? So this is either on top of your current mortgage, and that would be more of like a renovation loan, or new construction loan, where you weren't necessarily tied with one of the big builders. Maybe you had a custom home builder who was going to do a job for you and that kind of stuff. And then so you would get that loan based upon um, some normal stuff like your income verification and how much cash you had on hand and your ability to pay and all that kind of stuff. But these are available that can be then combined, for example, with the FHA, a jumbo or conventional. These also work with VA loans. Okay, a lot of VA loan people also kind of take these renovation or construction loans and then combine it with your VA loan. So that's all, so that's all good news. And so there are five different ways, or five potential ways to finance your new purchase. And so each one of these financing options comes with its own eligibility. Naturally, you saw that, right? And the requirements and advantages of these loans are all kind of different, right? Making the choice is going to require you sitting down, probably with the lender and maybe your financial advisor. Hey, we're not loan people, we're not lenders, nor are we financial advisors. So we kind of can't advise you on that, or we can point you in the right direction on who to talk to. So once you're aligned with one of these people, there's a lot of understanding that the four of us, or three or four of us, should have, so we understand what your home ownership goals are, so that we can all work together to get you, where you want to be. Hope that was helpful. Hey, next week we're going to talk about why right now there's a bright spot for buyers. Okay. Interesting information in here when I did all my research for y'all. So stay tuned for that. Again, this is Steve. I am with the Rose Realty team. Thanks for watching.